Hi, this is Rockcraft here, and I'm going to give you a little bit of an example of a typical Sunday gap trade on the Forex. One which happened last week, and I think is an atypical example of how Forex trading using the Sunday gaps typically plays out. It was a perfect example, and that's the reason why I'm going to use it. Okay. Here is a screenshot of how the trade panned out last week. It was pound Swiss, and as you guys will know, I have a setup process. If you look at our other video for Sunday night chart setup, you will see how to do it. But you can see here that on this particular Sunday, here is the Friday close on this bar here, close down here at the 0.4563 area roughly, and on the Sunday evening we opened up here. The market had a little bit of a retrace. These are hourly bars. If you look up here, you can see that we're working on hourly bars, pound Swiss. And in the first hour the gap widened, which is a perfect example. This gap here, whilst it was a reasonable gap, I still would have preferred it to have been a bit higher. Those of you who were in the webinar at the time, I was saying that exactly that. I was looking really for this gap to get a little bit wider. And what was I looking for an entry signal? Well, here's a perfect example. I had this resistance area here, which is why you can see I put this blue box in. So we were watching the market round about here on the Sunday night, 12 o'clock midnight UK time. And what I was saying was that rather than just get in here, which is what a lot of people assume that they need to do when it comes to Sunday gap trading, what they're supposed to do is identify the gap, get in, and then hopefully the gap will close. Well, that's not the case. What you need to do is you need to be trying to look for the best possible setup. It's the best setup that we're looking for, not just any old setup. And that's the difference. So here the gap opened up. It wasn't a huge enough gap for me to think that it's an atypical example. So really we wanted to see if we could get it to progress, which is what it did in the first hour. And then in the second hour, it moved up. What we were looking for on the webinar was this area here, between these two resistance levels. And you can see I highlighted a blue box saying, we even looked with a little thumbs up. I said roughly around about here, I think that would be a good entry level. The gap would have widened, the market will be coming up to a resistance level, and that would be a good position to take an entry. Obviously looking for the gap to close. So ideally here, when we entered in here, that we're looking for the market to come all the way back down here. This was a perfect example. Hour number 1, hour number 2 we hit, and then hour number 3, which was this here bar here, happened very quickly, probably in the first 10 minutes I recall, and I got in, and you can see I got in at a perfect entry point to me, right up here at these bar highs, and saying to me that this is a good place where I think we have a good chance of the market coming up against resistance and starting to make what I expect to be the fulfillment of a very secure and very profound gap trade. So what I want to do in the purposes of this video is I've shown you the setup. This is exactly the screen dump that was taken at that particular Sunday just gone, April the 15th 2012, and I want to show you how that trade progressed, because it was a very typical Sunday gap trade. One of the things that I highlighted in the webinar was that I asked several of the people who were in it, says, where would you traditionally think that you would put a stop level? The majority of people were saying, well look, we've got bar highs here, we would be somewhere up and around this level up here as an example, or up higher. And whilst I stated that seemed like an obvious place, those of you who've seen my gap trading setup video will know that I tend to put gaps, stops far wider, and to cover us for any eventuality. So let's look at how that trade progressed. Here is that exact gap, okay? But you'll see there's a slight difference here because I've actually put it on 15 minutes. Now, you'll see if you look at the setup video, I never trade on 15 minutes, but I put it on this here because I just want to show you the progression of the trade, and it's easier for to do it if I've got more bars, very typically. So this is that Sunday evening. Friday close here, Sunday open, first 2 bars here, first 45 minutes, market just moves sideways, doesn't really do anything. But let's see what happens as we progress. So during the whole period, I opened up my webinar here on this bar. As you know, I always let roughly the first hour go by and start to get involved round about here, start to look for my gaps round about here. We were talking through the webinar for roughly 45 minutes to an hour, and I highlighted that this is what I was looking for, this level up here. I put in the little blue bar, as we said, and lo and behold, we hit this entry level here. I got in round about here, took the signal, entered in, went to bed. Which is exactly what you want to do on a Sunday night. You're supposed to be in bed and enjoying yourself, stacking the Zs at least. Not sat there watching the charts. A lot of people looking to put in stops up here, as they said, to which I said that my stops will be right up here, somewhere miles and miles and miles away, not there. So market enters and then starts to progress, going against us. Those of you who woke up in the morning, what bar are we on here? That's still too early in the morning. But those of you who got up Monday morning would have seen a really good entry position because the market continued to widen. Here is 4:30 in the morning. Market continues to widen, and then we get this spike. The market opening. We always get these spikes here. But if you had your stop up here, I wonder how many people were caught out. How many people would have been caught out of here? Let's say they took my entry level on this blue bar. Here to here, 40 pips. There's a lot of people who would have been stopped out there. Look at the setup video that I have for the Sunday gaps, just to hear how I talk about stops. But there's a perfect example of the spike on the market opening. The gap continued to widen. Here we've got a fantastic setup now in that early morning. We're on 80 pips, 77, 78, 79 pips if you'd have got in right here at the peak. Okay, a fantastic opportunity to get in if you'd have been looking at that in the morning. And some of you will notice that quite often I will get in Monday morning, Monday afternoon even sometimes, if that gap has continued to keep going. So let's see how things progressed. It's now 7:30 in the morning UK time, and the market is continuing to widen. How many people at this point are sat here thinking, bloody hell, I've got it wrong, this is going against me, this is not what I want? Market going up and up and up and up. Conviction in gap trading. This is atypical. This is exactly what happens time and time and time again. And you have to have conviction in the system. You have to understand what it is that you're trying to achieve. You go right up here to this peak here. Here we are at 9:15 in the morning. All these early traders here coming back into the trade. First thing Monday morning, hitting signals, 80 pips. As we progress, look what happens. The market starts to drop and we start to come down. And look, we get our gap fulfillment. As you know, see the setup video again, you always set your target within 2, 3, 5 pips of the gap. Okay, and here, perfect. Market retraces down and we have a perfect close. That is your Sunday gap trading completed, concluded and done. Excuse me. If you're looking here on this 15-minute bar, you've got your obvious resistance support level here. Bang, down to that support level. You had this line in already. This was here that you did this on the Sunday night. You'd followed the setup video that I did. You put that in, and this market came right down, bang, hit it, reversed almost a pin bar, and then starts to shoot up. What do? The market has closed the gap. Let's say you didn't set your limit order, or let's say it just missed it by a pip. What do? If you are watching this and the market starts to retrace here? Imagine this continues to go up. We don't know yet, we've not looked, and you've not set your limit order. You've lost the gap trade. And look what happens. The market continues to rise. This is a perfect example of one of those instances where the market closes the gap within those few pips and then does its rebound. It fulfills that a perfect situation, which I believe happens 95% of the time, where a gap will always close. And here's a perfect example of where it closes to almost to the pip and then turns around. But just to show you how the gap trade progressed throughout the course of the rest of the week, because here we're on nearly 5 o'clock in the afternoon of that Monday. The market, let me just close that. The market takes a fantastic dive south. Okay, those of you that were still in, let's say you got in here, just same place as me, you had a fantastic 70-80 pip potential there. If you'd not got out here, I do not advocate that you do that. I advocate that you at least bring this your trade down to break even. Okay, so if you'd have brought your trade to break even here, you may just have stayed in if you are manually watching it. But the rules of the gap trading system are you set the limit order within a few pips of the gap open, and you should take the profit. If you can manually follow it down, then great, but treat that as being a fulfillment of the system and just leave it at that. How does the market progress? We have a fantastic drop down by 80 pips, a little bit of consolidation, and then the market slowly starts to rise. And you can see now where it's going. And that is a perfect typical example of a gap trade. This is the continuation during the course of that week, and we end up on a Friday with the market having gone higher and higher and keeping going on until we end up here, still higher than where it was last week. And that's a perfect example. I'm just going to put it on the hourly and move back to show you how that progressed on the hourly bars. Look at that. This is what happened during the course of that week. Now, that's where it came down and touched. We came down and got a little bit more potential opportunity, but it's still reversed and continued on. Make sure that you set the limit order, and make sure that your stop is at a reasonable level. Those of you who watched my seminar knew that my level was up here above this Fibonacci level, giving me a 70-80 pip stop on that particular example. And I would have probably been watching that during the course of the early morning, and if it had got close, I may have manipulated it. But there's a perfect example of a Sunday gap doing exactly what you'd expect to do. And this setup here, this bar here, or should I say this setup between this period and this period, is perfectly example of how things will happen, probably 70% of the time. That's me done. That's Rock Rat. There's several other videos coming. They've also got the setup video, and any questions, then you can always get me on the JM16. Thank you very much.